My name is Aman and I am a chartered professional accountant. In this video, I will explain how to save capital gain tax by buying replacement property with the help of the story of Mark. Mark had been operating a coffee shop in Kamloops, British Columbia through a company called Superlicious Coffee Inc., which had the year end of December. In 2021, for expanding his business, Mark decided to relocate to Vancouver and sold the coffee shop for $320,000. He had purchased the coffee shop many years ago for $105,000, so the capital gain was $215,000. Mark was worried that half of this gain would be taxed in his company as aggregate investment income, which is subject to a high rate of tax that is roughly around 50%. Yeah. Mark felt that he was just relocating and it is unfair that he has to pay the high amount of tax on the sale of the coffee shop property. Given the high amount of the tax bill, he took the wise decision to consult a chartered professional accountant. His accountant was a tax professional with chartered professional accountant designation, and he had many years of experience in tax planning to save tax for business owners like Mark. Mark reaffirmed to the accountant that the previous property was used just for the business, and the accountant told Mark that he was in luck as the property was not a rental property simply because the rental properties do not qualify under the replacement property rules. The accountant advised Mark to reinvest an amount equal to or greater than the proceeds from selling old property, that is $320,000, as this will help him save the tax on the entire capital gain of $215,000. Mark followed the advice and bought a replacement property to be used as a coffee shop in 2022 in order for deferral to apply. The accountant filed the election by attaching it to the income tax return for the year the replacement property was acquired, that is 2022. However, the gain on the sale of the coffee shop building property was realized in 2021. Well, this meant that Mark's company would have to pay the income tax on the capital gain and then request a refund in physical 2022 when the replacement property is actually purchased. Well, the accountant went a step further, and in order to relieve the financial burden for Mark, the accountant helped Mark provide acceptable security to the Canada Revenue Agency in lieu of the payment of taxes owing in 2021 until the time the final determination of taxes was made. Mark had now gained clarity on what are the replacement property rules and also how he can use them to his advantage to save massive amount of money in tax. Mark was transformed from a concerned and worried business owner to a confident and tax savvy entrepreneur with a solid tax strategy. If you want to be notified about our new tax stories, please consider subscribing to our YouTube channel. Thanks for watching and see you in my next video. Until then, bye.